Hello, everyone, and welcome to this webinar from the Canberra Business Chamber on exporting essentials. This is our 101 session on free trade agreements. I'm Greg Harford, the Chief Executive of the Canberra Business Chamber, and I'm really excited to be joined today by Stephen Di Lorenzo, who's the Director of Trade Advocacy, Free Trade Agreements and the Stakeholder Engagement Division of DFAT, and Darren Molyneux, who's the Assistant Director. So Stephen and Darren, welcome. Great to have you with us here today. Today, we're going to help our audience navigate the world of free trade agreements. We're aiming to give you more confidence and more insights into how you leverage global markets more effectively. I would like to thank the ACT government for supporting this program and the webinar that we're putting on today. Our format for today is that we'll have a presentation from Stephen and Darren. We'll have the opportunity for some questions at the end. So I'll hand over to Stephen and Darren at this point, and I'll come back after the presentation.
Wonderful. Thanks, Greg, and thanks for having us. I'll just start by acknowledging the traditional owners of the country from which we are coming to you, which is the Ngunnawal people, and we pay our respects to their elders past and present. I'm just going to start and get our presentation up for you today. We can all see that. Excellent. So as Greg said, I'm Stephen, and this is my colleague Darren. We both work in free trade agreements and stakeholder engagement at DFAT. And this is sort of our 101 on free trade agreements and how businesses can use and gain the benefits of free trade agreements to their benefit, or to their advantage, I should say. So today, this sort of presentation, we're just going to outline what we mean by tariffs and import duties. We'll then talk about free trade agreements and the effect that they have on duties and exports. We'll then talk about DFAT's particular tool that we have to navigate this, which is the FTA portal. We'll go through some examples so you can understand a bit of a step-by-step process on how to do that effectively. And then we'll just give some more information on future trade agreements that are happening, and also some update work that's happening for the FTA portal. And then if there's any sort of couple of questions, we're happy to answer those as well. So I'll kick off, and we'll start by talking about what we mean by tariffs and duties. So these are taxes that are applied to imports of a particular product or service into another market, also called customs duties. So these are actually applied by the receiving country. So if an Australian business is sending products overseas, it's the customs agency of the country that is receiving those goods that will be expecting payment, and it's the importer or the buyer of those products who is responsible to pay that. And the importing country's customs agency, they will hold those goods until that is paid. So a lot of these can range from anywhere from 0.5%, 300% or higher. These can be calculated in a lot of different ways as well. Sometimes they can be a cost per unit. There can also be quotas. So it does vary, and there is a lot of complexity in that as well, or there can be a lot of complexity in that. So certainly from an Australian business's perspective, it's in your interest to work with your buyer or your importer to reduce the cost of the tariffs as much as possible, to ensure that your product or service is as competitive in that market as possible, and to give yourself that kind of competitive advantage. So to be clear again, just to make sure, the exporter is not the one paying the tariffs, it's the importer. But you obviously want to work as closely with them as you can to reduce that. So this is where free trade agreements come in, and sort of overarchingly, what is the purpose of free trade agreements? We want to reduce those tariffs or those import duties as much as possible, and to eliminate them where we can. So in free trade agreements, a lot of the bulk of this is covered to the trade in goods, and there are a lot of chapters, and free trade agreements, as we continue to evolve and negotiate them, they do expand into a lot of different other areas as they relate to trade. A lot of things can include, digital trade, intellectual property, geographical indicators is a key one in terms of how we categorize or determine the origin of those products as well. Australia has, so far at the moment, as of today, we've got 18 free trade agreements, which cover 30 economies. We do make that distinction there between countries and economies because that is a key distinction as well. There can be economic units that are not nation states as well. So again, an importer, the importer is the one who needs to claim that what we sometimes call preferential treatment to get a lower rate for the particular product that they are importing into the country. So without that, there is a default tariff rate that will apply that that country would have, and that's sometimes referred to as the MFN, or the most favored nation, which is essentially within the remit of the WTO and those agreements there. So that is a default. So you don't automatically get an FTA. Businesses and importers need to know what they need to do. They need to know the documentation, and they need to know how to claim that particular tariff.
I'll just throw in.
Jump
So
in.
I think of tariffs like they're a tax. Ultimately, they are a tax on imports. And using an FTA is like claiming a tax deduction. So you need to know about the deduction, and you need to actively claim it. The tax office and importing customs are very happy to keep your cash. They are very happy to charge you a tariff rate. It's what they want to do. You have to correctly lodge your tax deduction to claim that. So you have to know about it, then you have to do the right things. And we'll get to that later. But the analogy to just income tax in Australia is actually it helps.
Really good. Thanks, Darren. So what we then need to know for businesses, we want to know, is there a lower rate of tax or tariff that I need to pay for my product? And in order to do that, we need to determine, okay, what's the MFN, what's the default tariff that my product is under? And if there's an FTA with the country that I'm sending this to, or the country who's importing my product, what are the FTA tariffs? There are often, there can be more than one free trade agreement with a particular market. So we want to determine, is that product eligible, right? So is it what we call originating under the free trade agreement? So it has to say that within a free trade agreement, this product originates in Australia. In order to do that, there are things what we call rules of origin, and there are product-specific rules that apply to particular products. So that's the information, they're the questions we're looking at for a business to understand, can I claim this? And part of the key way we do that and the service we provide is what we call DFAT's FTA portal. And at this point, I'll hand over to Darren and he can walk us through this.
Yeah, so the DFAT's FTA portal, ultimately, it's a tariff finder. Pretty much every country has tariff finders. So you can identify, whether it's through customs website, you often, Ministry of Foreign Affairs like us, so you can identify the relevant tariffs. So the default tariff Stephen's talking about, the MFN. So that's available to all countries who are members of the World Trade Organization. So that's pretty much everybody except some countries, your North Koreas of the world kind of thing. But to figure out the tariff rates on goods varies from good to good. So how do you know what the tariff rate is on your good? And we use something called the harmonized systems, these customs codes ultimately. Everything in the world you can drop on your foot gets a customs code, and there will be a tariff defined for that good. So you need to know what that is for the importing country. So if the default tariff is 0, you don't need a free trade agreement because there's no tax to pay. There's no tax deduction to claim. It only matters when the tax is non-zero, which is pretty often for a lot of the countries we export to, especially for a lot of things we look to export. And also for around about half the stuff that gets imported into Australia, particularly anything manufactured, there'll be a default 5% tariff that gets applied coming into Australia. And if you're paying that 5% tariff on imports into Australia, you're probably doing it wrong. So you want to look for free trade agreement, or there are other things called tariff concession orders and other ways, but free trade agreement is certainly the easiest thing to do. So so the portal, you will search you can search by keyword, choose your direction of trade, and choose the country. So importing or exporting from Australia to Australia, and the country at the other end of the transaction. Now, once you've actually searched for a good, in the search bar, you can search for beer. In this example, you can see beer's been highlighted. It actually returns you, they're called headings. They're groups of goods. There's about 1,200 different groups of goods, and one of them is, beer made from malt is one of those 1,200 groups. So if all beer that you can make, all beer made from malt will be under that heading, regardless of what else is under there. So we click on that, and then you get a much broader. I click. Oh no, we're back one. So the second heading under there, you can see a bit lower down. It's got down the bottom there. There's actually only one matching good under beer. Often it can be between one, or there can be literally hundreds when you get to car parts of goods under a heading, and you choose the right option. And sometimes you're just choosing the least bad option. You've chosen something that fits under that 4-digit heading. Then you just need to choose. It's a tree structure, so things made of one thing, things made of another thing, and you work through a bit of a tree structure. So if you're ever in any doubt on that, talk to a customs broker. Freight forwarder, they'll be able to help you. And at worst, you can always seek something called an advance ruling from importing customs, which is kind of like an advance ruling from the tax office, where they say, based on this information, this is your good. And you do have to be a bit careful choosing HS code sometimes, because it is a place where somebody might deliberately choose the wrong HS code to get a lower tariff. So customs officials get a bit sensitive about that. So you want to make sure you're trying to do the right thing. So once you've determined your HS code, you've selected that. There are tariff rates. So different trade agreements can have different tariff rates. We have that too. Yeah. Anyway, there's different tariff rates, so you choose the one. Usually you'll choose the FTA with the lowest tariff rate, but there's another factor to consider. We'll go to PSRs. Yep, there. So different FTAs have different rules. Some are very strict, some are more relaxed, and it's about how made in Australia something needs to be to qualify, to make sure we're just not importing something from China, whacking a made in Australia sticker on it and exporting it to somewhere else. So that kind of shadow trade, it's something that free trade agreements are designed to actually not allow. They're not designed to give lower tariff rates where people are just making it up and they're not making things in Australia. So the degree of manufacture varies from agreement to agreement. So for example, under one agreement we have with Japan to export wheat flour, under the bilateral agreement, JPA, we have with Japan, the wheat has to be grown in Australia. Under another agreement called the CPTPP, which is a plurilateral agreement around the Pacific, you can use imported wheat, and the act of transforming wheat to wheat flour is considered enough to confer origin. So it's made in Australia. So, think of the international supply chains and, we're importing things, how much value, how much do you have to change? And so those rules change from agreement to agreement. And so you have to, what you want to choose is the FTA with the lowest tariff rate that you can meet the requirements of. Right. So you can see this beer is structured under there, under a tariff heading. So one of the main ways that origin is confirmed is by changing things. Change in tariff classification, it's called, is one of the most common ways where you change in chapter. So you can see beer is under chapter 22. The code is 2203. So it's under chapter 22, under heading 2203. And so the rules, can we actually just go back one screen there? Yep. The rule is change in tariff heading. So CTH. So if, for example, you can see wine is under 2204, beer is under 2203. If you could change beer to wine, or if you could change wine to beer, that would confer origin. I mean, obviously you can't do that, but if you're changing, say, water and barley into beer, water is not in that chapter, is not beer made from malt. Barley is not beer made from malt. So as long as we're using things that are not within, for example, the heading, change a tariff heading, we can change that. So the rules will vary depending on the definitions, what's in the chapter and the headings and what the goods are and how strict they are. So you always just have to look at the specifics. But there's a questionnaire. There is a quiz that will ask you in the Defence FTA portal, which will step you through some questions and provide you with some guidance on that. Then the only other thing to consider then, so we've got what's the lowest tariff rate, that I can satisfy the requirements of. Then you need to prove it. The third thing is you need a little bit of paperwork to lodge your tax return, to support your claim for a tax deduction. So this is a normal kind of idea, just like that, your logbook, your evidence. So it's essentially, you need a declaration of origin, something that says, a sheet of paper that says, I promise my good is originating. So that takes two forms. we've got 18 FTAs. 6 of them require you to pay for and get a certificate of origin from an authorised body, like ACCI, I suspect Canberra Chamber of Commerce. But yes, so the very Australian Industry Group, there's another Trade Window Origin and international certification export service. So we've actually got 4 in the case of Wine Australia as well. So you need that piece of paper so it can be issued. So some of our free trade agreements, particularly those with your more Confucian type, so Asian economies, tend to be much more rules-based. And our other agreements, for example, with the UK, with the US, the CPTPP I mentioned, they allow for declarations of origin, which is essentially a stat dec. Bit of a specific format, has specific requirements. The actual exact layout can be quite varied, but there are requirements of what it needs to say that are set out in the document, and you get direction to that on the Free Trade Agreement portal, and you basically make a stat declaration that my good is originating under the agreement. It satisfies. I declare to the tax office, to the tax man, to Mr. Customs, my good satisfies the requirements, and please give me that tariff discount available under the FTA I have nominated. But again, you need to know it. That's it. And I'll just another note. Tariffs are a really important source of revenue for many partner governments. Importing officials, they are out to get you. So they will happily keep your money. So it's one of those things where you want to make sure you give them the paperwork on time and dot your I's and cross all your T's, because we negotiate free trade agreements essentially so that you can claim tax deductions from other countries. We want you to not pay tax for them. We're also very happy if you do not pay import tax coming to Australia, but that's the kind of thing. So you need to have your best game on when you're claiming FTAs. Okay, so I'll also mention the FTA portal. There are a few screenshots there. We're actually currently just in the throes of upgrading it. So there'll be some subtle changes to improve the presentation information, particularly those 3 points that I was talking about: the tariff rate, the rules of origin, and the documentation you require, because those are the 3 things you really need to think about when you're choosing an FTA. Again, and it only matters when you're trying to get that lower tariff rate.
Fantastic. The other point I'll mention is that DFAT is obviously leads on trade negotiations, and we have a few that are currently under negotiation as well. So we are upgrading our current agreement with India to what we call a comprehensive economic cooperation agreement. And we're also in the middle of a first round or several rounds of negotiations with the UAE on a comprehensive economic partnership agreement. And DFAT undertakes consultations with business around Australia to inform our negotiating positions on this. But we also do want businesses who might not always be a part of those consultations or want to find other ways to contribute to please make submissions to those negotiating teams. And we've got the email addresses there for businesses to put those to us. By default, those submissions are published on our website, but you can just let the team know when you do send that email through that you want your submission to remain confidential, in which case we can do that as well. That's not a problem. But Greg, thank you very much for having us, and that's all we've got for you guys today.
Excellent. Thank you very much, Stephen and Darren. That was really interesting and really informative. Look, there's just a couple of questions here. Now, we've got, I think, 18 FTAs. You said 14 of those are with individual countries, plus there's 4 regional agreements, if I kind of understood correctly. But they're not all the same, right? So it's really important to know that when you're selecting your market, actually there can be quite big differences between what's covered in the various FTAs. So I think we've lost you on mute there.
Yeah, that's right, Greg.
Yeah, so that's what I was saying. So you really want to compare the free trade agreements, and if you claim one that nobody else is going to help you, claim the best FTA for you. And it will vary. So once upon a time, I helped somebody exporting the wheat to Japan, the flour to Japan, and they had to choose the free trade agreement with the higher tariff, but it was still lower than the default, but it had rooms that they could satisfy. So so you just choose.
Yeah, it's a combination of working out which rules apply for your particular product and then seeing which of those agreements can satisfy it, and then you can claim the particular tariff deduction under that.
Yeah, and rather than forcing you just to have a look at the PDFs of the treaty documents on the DFAT website, we really sort of do push the portal to make it easy for you to compare for businesses. I mean, once you know your HS code, you can compare those FTAs. That's really our goal, to help businesses pay the least amount in import tariffs.
Yeah. So free trade agreements, though, don't necessarily mean free trade, right? Because some of these agreements will still have tariffs in place. Some will be free of tariffs, but others will just have reduced rates.
100%.
Yeah, that's right. Maybe we do sometimes joke, maybe it's better to call them freer trade agreements because, yeah, as you say, it's not always elimination.
Yeah.
Yeah. Okay.
In a perfect world, they would listen to our wonderful economic logic and eliminate all tariffs on goods going into their countries, but other countries just don't try. They don't trust our economics, so we're left with going with free trade agreements, and that's the one way to try and promote free trade around the world.
Yeah, and we wish you the very best of luck in negotiating the next stages of these, and hope you can get them down. A couple more questions. How do free trade agreements cover intellectual property rights, and does that impact innovation and technology transfer between countries?
Yeah, good question, Greg. And this is quite a dynamic space in terms of when we're looking at IP, particularly when it comes to digital trade as well. I guess what I would say on that is IP is a pretty integral part of Australia's trade and investment profile, and it's really an important part of our economy as well. So of our 18 free trade agreements, 14 of them do have a dedicated chapter on IP rights in particular. So Australia's IP rights chapters are more or less designed to encourage creativity and innovation and provide an effective and sort of balanced protection and enforcement for those IP rights as well. So that includes like technology transfer, things that are consistent with Australia's IP laws and regulations as well. It's really in our interest to promote agreed international standards on the protection of IP rights, particularly as they relate to trade and investment, and sort of stimulate innovative and economic growth. So standard setting is really important, and that's something that we engage in as well in a lot of our meetings as well.
Okay. Our next question relates perhaps to when things aren't going so well. What happens if there's a dispute? Perhaps if a member or an exporter is disagreeing with what's with a judgment that's being made, or perhaps the importing country is not agreeing with the assessment that's been made. What happens, and do those evolve into kind of broader disputes between countries? And are there some notable disputes that have happened, and how have they been resolved?
Yeah, that's a very complex question. And I guess there's probably two parts to that. So one would be the dispute, if there's a dispute at a business level, right? So if a business is disputing a particular decision by an importing country, and then there's the other question of when it becomes like a dispute on the agreement between the two governments, so between the two nation states. So that's a distinction I'd probably make there as well within your question. When it comes to businesses disputing, so I can't recall how much the number of FTAs, but a lot of them will have. There's always a particular avenue on dispute settlement and recourse for business. So who is the competent authority in that particular market who is able to hear that dispute and provide appropriate redress that satisfies Australia, what we consider to be a fairly similar approach to what we would do in Australia. So that will be contained within the free trade agreements. That information is not directly available on the FTA portal because the portal is mostly dedicated to the tariffs, but you can find that information on DFAT's website under each FTA. There's a chapter on dispute resolution, particularly for business. When it comes to sort of if that escalates up, so when we're talking about a sort of state to state or country to country dispute on the mechanisms of that, all of our FTAs have that dispute mechanism in there at that level, and that includes both our bilateral and our plurilateral FTAs. Just trying to look at my notes here on this particular kind of question where we do try to establish kind of effective and efficient processes for doing that to avoid disputes actually arising in the first place. But I'm trying to think of some examples here as well. I mean, Australia's actually, to my knowledge, never really been a party to a state-to-state dispute under our bilateral FTAs. And I guess that's to say we've never brought a dispute or had to respond to one so far. So I think I'd put that down to the effectiveness of our negotiators and the fact that our partners understand we negotiate in good faith, and we work very hard to get solid and firm agreement on the text for our treaties. So yeah.
Excellent. All right, look, we've got one final question here, which is relating to labour standards and environmental protection. How do free trade agreements influence those, and what safeguards are included to ensure fair practices and sustainable development?
Yeah, this is a good one. So Australia is we're definitely pursuing the inclusion of labour and environment provisions in our FTAs, and particularly in the upgrades of FTAs that we're currently upgrading. So the India CECA would be an example of that. And that, of course, needs to take into account the preferences and circumstances for our negotiating partners in all of those negotiations. Our bilateral FTAs, so with the UK, the US, Peru, Korea, as well as the CPTPP, they all have environment and labour chapters. And those chapters contain provisions that do affirm and promote internationally with recognised principles and standards and rules. And they sort of reflect our obligations and commitments that we sort of have here, and the obligations and commitments that we expect of our partners as well. So for many countries, formalising commitments on these issues do come with their own particular challenges that they have domestically. And so part of building these into our free trade agreements is how we can start to work more closely with those partner countries to sort of build their capacity and also cooperate with our agencies as well to kind of achieve those improved standards. Yeah, I hope that helps.
Excellent. Thank you very much. Look, that's all the questions that we've got here. So look, thank you very much for your time today. I'm Greg Harford. I've been with Stephen Di Lorenzo and Darren Molyneux from the Free Trade Agreements and Stakeholder Engagement Division of DFAT. It's been a really interesting conversation. Thank you very much for joining us, and thank you again to the ACT government for supporting this series of webinars. So thank you very much.
Thanks, Greg.
Thanks, Greg.